Hello, and welcome to the Australian Business Podcast. My name is Zara McGuffey, and I'm the CEO and co-founder of Inflection. Together with Jordan and Daniel, co-founders of Grayspace, and Owen, the founder of Rask, we bring you 2 episodes every week to scale your business. More profit, less effort. Get ready for the best marketing strategies, tax tips you can take to the bank, interviews with startups, scale-ups, ma and pa businesses, and domain experts. If you like the show, you can work with me and the Inflection team to scale your marketing and automation, join our business accelerator, take an online course in business or marketing, and simply say hello in our free online community. You'll find everything you need in the show notes. I hope you enjoy today's show.
Welcome back to the Australian Business Podcast. Today, I have a special guest. His first time podcasting, Daniel from the Grayspace office. Actually, I should say Daniel Chand, so people don't get confused. How are you, Dan?
I'm good. Thanks for having me here. It's actually a big thing for me because I love to talk.
Yeah, you do.
Yeah, and it's actually exciting.
Do you want to give the listeners a bit of a background about yourself and what you do at the Grayspace office?
Yeah, so actually I work in Jordan's team.
Yep.
And I'm the senior accountant here. I work pretty much with a lot of different entities, with a lot of different companies, individuals, and we do their tax solutions as well as just liaising with them, trying to create that client engagement and just building that relationship. So that's what I'm here to do, and that's my life.
Yeah, good stuff. It was funny. We spoke last night, and I've thrown you in the deep end here. I said, "Hey, would you be sweet to record a podcast?" And then Daniel, DC, his nickname here at the office, goes, yeah, no problem. When do you want to do it? I said, first thing tomorrow morning. He was like, okay. So here we are.
I was
12
driving,
hours.
I was driving at the time, and I felt like I was going to have a bit of a crash.
Bit of a panic attack.
Yeah, I was super excited.
I could tell because the tone of your voice changed.
Yeah, it was really high pitched. And it already is high pitched, so.
No, you're doing fine. What we're going to talk about today is some essential tips that every business owner needs to know. We want to run through a few key topics, how to set up your small business from the accounting side of things and set that up properly. It's maybe not the most fun thing to talk about, but I think it's really important that people do have an understanding of these topics. So we're going to talk about all things accounting, some small tax tips that can apply to any business owner. So I think in order to start, the first thing that I want to talk about is revenue, profit, and cash flow. So what are the differences between them, and why does each one of them matter in their own way? Yeah,
definitely. Well, revenue in essence is just your turnover. How much have you made in the business, and what type of income is coming through during that year or during a certain period. Profit is when you consider the revenue minus all your expenses that have been incurred in the business, company, individual. That profit is the net amount that you've made overall. And cash flow is how much money is currently flowing through and what is your actual cash held. And the reason why they're so important is because if you think about it, with revenue, each year you want to know how you're performing. And it's not about how much money you're getting, it's about how much you're growing. And that's the main thing. If you notice revenue is steady, it's more of a question about, am I doing the right thing? How can I make more money? And how can I grow that business? Profit, the reason why that's so important is because that's the net amount that you're receiving after all your expenses. Is it actually a profitable business? And then cash flow is, can I fund for new things? Do I have the money to then reinvest? What is my cash position just in case things are due and payable? And that's for me, that's the core difference between the three.
I agree. When talking about revenue, it's important to understand what drives revenue in the business as well. And it can be, the main thing is your marketing spend or your advertising. So ideally, in the perfect world, sometimes it's not the case, but if you spend $1, ideally you want to be able to make 2 or 3. So that's one of the key drivers of revenue. And another driver of revenue that people don't think about is staff, people. Because if you've got all this work, that's fantastic. But if you can't get to it and you don't have the staff, well, pointless, right?
Oh, exactly.
I mean, you're just going to have issues with your customers. It's very important. It's very important to understand the drivers. Now, profit, I couldn't agree with you more. It's essentially what's left over after you've paid everything. And cash flow for me it's an interesting one, right? Because when we speak to clients, a lot of the time, that's their gauge of how their business is going, is when they log on to their net bank and they see that it's true.
It happens a lot.
And that's how they gauge where they're at. So I think it's really important to understand how cash flow actually works. So there's a document that we prepare for clients called a cash flow forecast. And I think we've shared it on the podcast before. It's a document Dan's put together where we essentially have all of our revenue, all of our expenses, and that gives us our net profit. And then underneath our net profit, we have to take into account items that aren't in the profit and loss statement, right? So we have to take into account our ATO payments, our hire purchase agreements, if you have cars on finance. And after you've paid all of that, that's what you're left over with from a cash flow point of view. So it's really important. You know what? I think the most important thing is probably cash flow out of all of these.
Oh, 100%. Yeah, because you have your opening balances of the bank, the closing, and then you've got all the asset movements.
Exactly.
Where did your money go? Because obviously you see the profit, it should be sitting in your bank account, but why isn't that happening?
Yeah.
So then that splits it out, and then you see which assets it's gone to, which liabilities. What are you paying that's beyond the profit and loss?
Exactly. The most interesting comment that we get is, where's all my money gone? That's what a client would say. Where's all the money? I don't have it. Well, you've taken it personally.
Yeah.
And it's sitting in your director's loan. So maybe we can do another episode and talk through director loans and Division 7A. Super, super fun topic to
very
talk about.
common, yeah, very common issue.
It is a big issue that we see with clients where they see that the money comes into their business account, but then they'll take it out personally. But that's a different kettle of fish for a different day. Now, expenses. So what are expenses, and more so like your fixed versus your variables? And what are some expenses that business owners have in Australia?
Yeah, no, definitely. So fixed are expenses, for example, there are costs when you're operating, regardless of any type of turnover.
Yep.
These expenses will always be incurred. Variable are expenses that can change based on your turnover and things that you're trying to actively do. The best example for this is if you have, for example, if you're selling couches. Sorry, this came on the top of my head. Nice. I always want to be a couch salesperson. If I was to buy the
I think you would do good.
I reckon I'd be pretty good as well, to be honest.
I'd like to see you on the floor, on the sales floor.
I'd probably want to sit down eventually on a couch.
Yeah, they'd find you asleep somewhere.
So if I was going to sell couches, for example, and I opened up my own warehouse, I would have certain costs, such as the warehouse costs, the rent, certain employees at the time, where these costs would always be there.
Yes.
But the variable costs would be, for example, if I'm buying in actual inventory, couches, that will scale depending on what I'm trying to sell and how I'm trying to grow. So fixed are things that are always going to kind of be there because of the fact that you are operating a business, while variable does fluctuate based on your turnover and what you're doing.
Yeah, good example. I agree. It's super important to know as well. When we speak to clients, we always talk about having that OPEX, say 2 or 3 months worth of operating expenses saved in the bank account just to save for that rainy day. So it's important to be able to identify what those costs are. And if you do have a zero file or MYOB file, and you look at the P&L, you'll be able to see them quite easily if your chart of accounts is set up properly. If it's not, or you're unsure about it, just reach out to your bookkeeper or your accountant and they'll be able to guide you through it. But super important to have all of that stuff set up properly from the start. I want to talk about balance sheets. Now, balance sheets for us is the most important thing, but for business owners, a lot of the focus is on that first thing that we spoke about. Well, the first two things we've spoken about being revenue, profit, and expenses. How would you explain the balance sheet and explain what assets, liabilities, and equity are in its most basic form?
It's really hard to say. Just because I've done accounting for so long, it's hard to explain it at the raw its form. But assets are pretty much things that the definition is things.
What's your definition? I remember these definitions from uni. Let's test your memory.
It is something that you're expecting a benefit for more than that's beyond a certain period, and you're expecting a future benefit. So if it's more than 12 months, it's considered a non-current asset. But if it is within the 12 months,
We're going back to accounting, eh?
we are back 10 years ago, by the way. It's a long time. Maybe, actually, no, 14 years ago when I first learned this, yeah. I feel pretty old now.
Pressure.
Yeah. And
Don't
then
get it wrong.
So there's two types in the balance sheet. There is, so obviously there's assets, things that you're, there's expected future benefit to help the business. Liability is future, I don't want to say like not benefit. It's things that you have to pay or things that you have to consider where money might be getting forked out. And then equity is obviously the overall, so it's where your retained profits are. So pretty much where the difference between your assets and liabilities. That's just your net benefit that you've got in the company, the net value, as you'd say. And beyond that, they're split between current and non-current. Current is that you're expecting this benefit within 12 months. Non-current is it's beyond 12 months.
Perfect. Well said. I think the most important thing on the balance sheet, well, beyond the most important thing, but to rattle off some of the things that you would see when you look at a balance sheet, it's where you would see your company bank accounts or whichever structure you're trading out of. You'd see your bank accounts, your fixed assets. So things like your motor vehicles, if you've purchased plant and equipment, whatever it may be. And then you can also see your director loan, which is something I think we will talk about in our own time, another episode, because it's worth doing a deep dive on what a director loan is. And in terms of the liabilities, we would see your PAYG withholding, your GST, your company income tax installments, again, if you're trading through a company, your hire purchase liabilities.
It really is future debts that need to be paid and things that need to be realised, at that point. Yeah,
exactly. I think it's really, really good to have a baseline understanding of what the balance sheet is. Like I said before, a lot of the times people are just focusing on that profit and loss statement. And I get that. At the start, it's probably one of the more important things to do. But once you start to really focus on cash flow, you do need to take into account the balance sheet. And the reason I say that is because if you have, let's take the BAS, for example, right? So the BAS is the summary in its most simple forms. It's what you either owe or you're owed by the ATO for the net outcome of GST and PAYG. Now, that doesn't sit on your profit and loss statement. It's not revenue. It's not an expense. It sits on the balance sheet because it's a liability. That doesn't show up on your P&L.
No.
So it's really important to understand, and clients will come to us and say, oh, I've got no idea what my BAS is going to be. Look, there's heaps of reports on Xero or MARB that you can pull out. But if your balance sheet is nice and clean, you should be able to see that on your accounting file.
Yeah, definitely.
So I believe it's one of the more important statements. As accountants, for us, it is the most important thing, the balance sheet, because we need to make sure that everything there is there and it's correct. So yeah, for me, the balance sheet's probably the more important thing. Now, we've spoken about revenue, expenses and whatnot, but these all show up in the P&L. Why do you think it's important to track your profit and loss on a quarterly or a monthly basis?
Well, very simply, how do you know if you're making money or not?
Yep.
That's in essence what it is. Should I run my business? How am I going? Am I spending too much? Am I spending too less? Obviously, you want to be spending a lot less, but it helps you make decisions about your business in the core form of how you're operating.
Yeah, agreed.
That's what it is.
Agreed. A lot of the times we'll speak to clients and they'll say, I think I'm ready to bring someone on, or, I need to spend more money on marketing. And we'll ask the question, well, how have you come to that? How have you come to that decision to bring someone on? If they can't say that, there's been an X amount of increase in workflow, there's been an X amount of increase in profit, then you're essentially shooting in the dark. And you can't be doing that when you're making, especially hiring decisions. I think that's one of the bigger decisions business owners make. So it's really important to have a thorough understanding of your profit and loss.
Oh, definitely. I think you kind of need to, especially when you're starting off as well. Sometimes it is really important to focus on the numbers,
yes,
as well as understand what they mean, and understand how increasing like a certain expense, like bringing in another person, how that could affect your overall, turnover, your markup, just how it brings your net profit down.
Exactly.
And does that actually help you grow? And that obviously goes back into that conversation about our fixed costs and our variable costs. And we're obviously getting someone new in here, but how does that affect our overall revenue? Does that increase it?
Exactly. It's also important to note that when bringing someone on, there is a lag. There's time for training. There's time for them understanding the systems and the processes and how you operate. So you can't expect to bring someone in and instantly see a reaction on the top line in revenue. So something to think about as well. And that's why cash flow then becomes important, because you may need to be able to float these wages for a month or two. So it all does tie in. But today we just want to cover those high level, the high level explanations on these items. Now, GST and BAS. How would you give a quick rundown of what GST is and what a BAS is? So
GST, great thing. So it's 10%.
Do you think it's a great thing? John Howard said that he wasn't going to do it and then he did it.
I do actually like John Howard though.
Why?
He was just so stable, in my opinion.
Stable?
Yeah. Oh, I really liked him, and I liked a lot of liberals as well.
We don't talk about politics on this podcast. So this may be your first and last.
Whoa. I mean, I'm a big fan of everyone.
I'm joking.
No, GST is pretty much once you earn over a certain amount of money, it's compulsory. It's 75,000. Beyond that, it is optional if you want to. And what it is whenever you make money and you're registered for GST, you need to report 10% of that to the ATO. So, for example, if you were to make $70,000,
So just to confirm, DC is talking about in revenue, so it's not profit.
In revenue, that is.
Yes, because I remember I've had a few calls where people they'll come to us to do their end of financial year stuff and, I only made 70K in profit. It's like, no, dude, you turned over 200.
Oh.
Yeah, we got a problem.
We got a problem, mate. So for example, if I invoice Jordan, for example, I need to consider 10% worth of GST in that.
Yep.
And what I do is I report that 10% to the ATO. Following that, if I am incurring expenses and they are registered for GST and GST does apply to that, I can then claim 10% of that as an offset against that income as well. That is GST. And then with BAS, business activity statements, it can be quarterly, it can be monthly, and there can be annuals. But in this case, we'll talk about quarterly because they're the most important ones. That's where we report our GST. So we report what our total income is with the associated GST credits on that income, which is 10%. And then we report our GST on expenses only. If you're in simplified, there's different methods on how we report GST as well. But just to make it very simple, because we're using the simplified method, it's just be the GST on your expenses. If we have employees, we also report what their wages are for that period, and we also report the withholding tax as well.
Excellent.
There is one more thing. If there is something called an installment, we won't get into it, but there is prepaid tax installment as well that does fall into that.
Yeah.
And there is other stuff, but let's just not get into it.
You don't want to talk about wine equalisation tax and all those fun things?
I do like my wine. Yes, there is wine equalisation tax.
Yeah, there's a few other things, but just to keep it nice and simple.
Yeah.
That's
fuel tax credits.
Yeah. True. 9 out of 10 businesses that we deal with, that's the summary of what they'll have to report in their BAS, and the BASs are done quarterly. I would say 9 out of 10 businesses, quarterly BAS, simplified method, unless your turnover starts to get nice and large. So yeah. I think that's a really good summary, DC.
Yeah, I'd say 9 out of 10, and then about at least 60%, 70% do their like their wages quarterly as well.
Yeah.
We do have a couple that do monthly, which makes total sense as well.
Excellent. It's also important to touch on superannuation. Now, superannuation isn't part of your BAS. It's completely separate, but you need to be processing that on a quarterly basis too. We've started to see a lot of business owners process it as they do the payroll, which I think is great because two sides to it. One, it helps with your cash flow. If you don't have a structure in place where you're constantly looking at it and you are using that sense check being in the bank account. So a lot of business owners are doing that as they're doing pay runs. Secondly, It's also better for the staff because their money's going into the super fund quicker.
Yeah.
They're able to earn those returns quicker. Super important to pay that. I think it's the most important thing. Super.
Oh, definitely.
From an employer perspective. Don't get me wrong, you need to pay everything and lodge everything on time, but super is the most important thing to do because it's not the business owner's money. It's your staff, the employee's money.
Well, yeah, I mean, the funny thing is I do see a lot of clients put that money aside into a separate bank account. I believe I don't think it's been confirmed yet, but you can quote me on this. But as of 1st July 2026, I believe you are meant to be paying super in terms of...
In accordance with the pay runs.
Exactly. So it's something that will definitely be, it has to happen going forward. But I completely agree with you. It's money that's sitting there, and it's a further debt that employers need to pay that's just lingering there.
Yeah.
Setting that aside beforehand as you're doing pay runs, it just makes a lot more sense because it does alleviate a lot of that pressure as well.
Yeah, exactly. And just to double down on your comment, that bank account, having that separate bank account is super important. You can have that separate bank account for the super. You can have it for the PAYG withholding, which is the tax on wages, and even the GST. What a lot of our clients do is they'll just transfer over 10% of any of the income that comes into that second bank account. Now, you're always going to overshoot when you do that because that doesn't take into account GST on expenses. But as a baseline, I think it's a great thing to do.
Yeah, and it helps every client make better decisions, and it helps with their cash flow overall because they know how much money that they can utilize. They know that when you set money aside, it actually helps you utilize that a lot better.
Exactly, and you're not going to spend the money that's not yours.
Exactly.
Accounting methods. Now, there's actually two accounting methods: cash versus accrual.
Ugh.
Definition, please.
So.
We can give pros and cons of both as well, and maybe some examples.
Yeah. Look, cash, what's at your bank account?
Yep.
What have you received? And what's kind of is pretty much the bank account.
Yeah.
That's what it is. Cash is what cash have you received? Obviously via EFT.
Not cold hard cash.
Yeah, not cold hard cash unless it's been banked in full.
Because you shouldn't be getting cash.
Yes, exactly.
Because it's
ATO $300 million funding.
Yeah.
For that stuff.
The task force.
Yeah.
Tell us more about that. What are they trying to do?
$250 million, I believe, and they're using that to fund for is it unreported income? So it's more cash basis, and they're trying to find out how they can minimize that and how they can target.
Yep. So just to be clear, we're not talking about cash as in cash, $100 bills. It's an accounting method.
Yes.
Just to be clear, we're not talking about that. But yeah, it's essentially your reporting status on how you account for your GST. Cash is exactly what DC just said. What's accruals?
Accruals takes into consideration if you're invoicing and you're paying bills but you haven't paid them yet. So it takes into consideration all the debt and income that you have not yet received.
Yes. Yep. Good explanation. 9 out of 10 business, I would say 99 out of 100 businesses that we do are on a cash basis.
Oh, 100%.
Because if you don't have a bookkeeper, a full-time bookkeeper, you shouldn't be on cash because it's just, you shouldn't be on accruals. Yeah, because it'll just become a mess very quickly.
Yeah. There's a lot more in line with that.
Yeah.
You need a lot more assistance with that stuff.
That's right. Now, having a separate bank account for your business and your personal is very important. We've briefly touched on director loans and Division 7A. Why is that important? Why is it important to have separate bank accounts and not just use your business as a personal debit card or credit card?
If you think of it like this, when we jump into Xero files, MIB files, and we're reconciling and we're trying to figure out what the business has done, having personal expenses in there makes it harder for us to understand what is deductible.
Yes.
So it draws a bit of a line as to how we can claim things. It also it raises a lot more questions as to how we do things as well. So then we always go back to the client, ask more questions.
Correct.
It really pushes the time on getting something completed. Another issue that I see with it is, let's just say things are claimed that's personal related. because it doesn't actually relate to the business, how can you actually gauge how the business is going?
Yeah.
You can't do it because it just means that you're overshooting how much expenses you have. Potentially that could make worse decisions in terms of, should I be charging more now because I want to see more of a profit or more, more of a profit. But then you realize that you've always been doing well. You just got business, you've got personal expenses mixed in with that. And then it does disrupt how you do, how you invoice, for example, how you charge your fees. It changes the whole dynamic of it.
Yeah, it's such a good point. And it's something that a lot of people do. They want to pay the least amount of tax, which everyone does. But what we're talking about is personal expenses. So like there wouldn't be, even if you spend it on your business credit card or business debit card, even if it's a personal expense, doesn't mean it's a tax deduction.
Oh, exactly.
So it's very important to note that too. But yeah, it's an interesting one because people do that all the time. It's just so important. What we suggest to our clients, so again, this varies depending on circumstance, but is to have a set wage, even if it's your own company, get paid the net amount every week. That's your pay. If there's an extra $30,000 or $40,000 in the business account, it doesn't mean it's up for grabs. That money is owned by the business. You can't just take that money out or spend that money personally. So very important to have separate bank accounts and clear lines on what bank account's doing what.
And I think this also goes back, and we'll talk about it later, but this Division 7A and director loans, I noticed a lot of clients don't understand the relationship between what a company is, how it's separate to the actual individual.
Yes.
And then it creates that issue with loans, for example.
Yeah, for sure.
That's one thing that we always pick up every time.
Yeah, for sure. We've spoken about a couple of these already, but I think it's important to just highlight them again. I think it's important that our listeners have a really good understanding of the main, I would say these are the main taxes that anyone would pay.
Yeah.
Look, there are more that DC alluded to earlier, but let's just stick with these. So income tax, let's assume we run through a company. So I can't call it company tax.
Yeah.
GST, PAYG withholding, and super guarantee. Why is it important to track all of these things?
Well, the company tax, it's obviously something that we do at the end of each financial year.
Yeah.
And we look at the office of profit. There's whole things that we do in the background, but to make it short, at the end of the day, that's really important to track because that tax that you pay on your profits, that can be reutilized in different ways for shareholders, for example. But the reason why we track it is because when's the due date? 15 May the following year.
Yep.
Unless I think there's certain circumstances. It could be, if it's a large company,
correct,
it can be
31st
of March. It's really important.
And if you're late for your last year, 31st of October.
Yeah. So it's really important to keep track of that because obviously income tax is the main thing that the ATO obviously does look at. It's something that they're always touching base on. GST, something that's done quarterly, something it could be done monthly or annually. The reason why this is so important is because this really does creep up on every client. It is 10%, and it is something that you do have to pay on a recurring basis, depending on how much you earn. And it's an obligation that comes through like that. PAYG withholding, very important because it once again, like you mentioned before, PAYG withholding and super actually, it's not our money. One of them obviously goes to the ATO, but it's for our employees. That's PAYG withholding. Once again, it's hand in hand with GST, and depending if you're quarterly or monthly, it does factor into how you need to keep your how you need to manage your tax obligations and how you need to manage your cash flow for that. And super, like you mentioned before, something that should be either paid as payroll is done or put aside in a separate bank account. Two main things. Always, and that's always the 28th of that following quarter.
It's interesting you mentioned those dates. For anyone listening, if you Google tax agent lodgement, I think it's tax agent lodgement cycle. I'll just bear with us. This is a live demonstration. Yep. So sorry, registered agent program 2025-2026. You can actually print out this table, and that way you can see all the key dates, whether it's super, your BAS, company tax return, whatever it may be. You can just stick it on your wall because a lot of the times, when's my BAS due? When's my BAS due? Well, these are the dates for everything. Like I said, super, BAS, tax return, FBT, if you're registered for fringe benefits tax. We're not even going to talk about that. But again, the dates are really important to remember so you can budget for them. But if you've done what we said and what we always speak about on the podcast and having separate bank accounts, it shouldn't come, when it comes around, it shouldn't really bite you in the ass because the money should be sitting there in that bank account and then you'd be very close to whatever the payable is.
Yeah, it won't be a surprise.
Yep.
And I think that's the main thing as well. And if you're always putting 10%, especially with GEC, for example, like you mentioned, when the expenses come through, you end up doing quite well.
Yeah, exactly. Another tax tip, structuring. Now, try and keep it brief.
Yeah.
Let's just say sole trader versus company.
Yeah.
What are the quick overview of the tax differences?
Sole trader, individual tax rates.
Yes.
Company, depending.
Yes.
It's 25 or 30%.
Yep.
And that's a cap. There's also other things that you need to consider, but that's just the basics.
Yeah.
So you are capped at that. And then trust, there is actually no tax rate unless money is just left in there.
Yep.
But let's just assume that it's done correctly.
Yep.
It gets distributed to the beneficiaries there and it gets hit on their tax rate. So whatever the individual tax rates are.
Yep.
So that's the main tax difference. There are obviously, as with time constraints here, I reckon it depends on what you're doing and what you're turning over. That makes a difference. But that's and obviously there's other tax benefits for being a sole trader. I'll give you an example, primary production.
Yep.
But there's benefits being in a company and there's obviously a lot more benefits having a trust as well on top of that.
For sure. It's important to touch on limited liability for a company. It's one of the more important things and why we advise clients to set up companies with trusts. What is it essentially? That protect from that protection side of things, personal sole trader or their assets versus company and the company assets.
Yeah. So obviously, within the company, any assets and liabilities, if something does go pear shaped, you are limited to that company because it is a separate legal entity. There is generally you can't the directors and shareholders can't be attacked personally from any type of debt that comes through. It is limited to the actual company itself.
It's funny. It's not funny, but this corporate veil or this protection, as time goes on, it's becoming, I wouldn't say you're less protected, but there's things like director penalty notices and, you can be liable for GST personally, even if you do have a company set up, but we can chat about that at another time. So look, there is still benefits to a company 100%, but it's like it's getting peeled back.
Yeah. And one thing actually, oddly enough, that I've learned here as well that I haven't dealt with is asset protection and setting up a company for asset protection.
Yes.
That's something that actually me and you've actually talked to me about a lot. Super important, having a separate company for asset protection. Just obviously certain circumstances, obviously, it depends what it is. But companies just make such a big difference.
Yeah, I agree. Awesome. Good stuff, DC.
Thank you, sir.
First episode. How do you feel after that?
I think I need another coffee, to be honest.
Really? You just had one as well?
I'm drinking it as we speak and I feel like another one.
Yeah, good stuff. If anyone wants any help with any of this stuff, we'll have a link in the show notes. You'll be able to book a free strategy session with someone from the Grayspace office and you'll be able to pick our brains about anything from structuring, your BASs, whatever it may be. So feel free to book a strategy call. We'll have a link in the show notes. DC, thank you very much for today. That was great.
Thank you so much for having me, guys. Thank you.
Anytime.